So this makes me think that there are opportunities in the RI space that can offer a different perspective for investors. Do you agree?
Yeah, absolutely. There's lots and lots of opportunities because all of these things are happening. You could look at it and say, where do you start? And the world is in a very interesting a very interesting place. But at the end of the day, this is where opportunities come from. And what's important for us is we can actually work with some of those companies that are having some of those challenges to improve the situation they're in. So what might be interesting for your listeners to know is it's not just a case of us staying away from companies that are or have less than ideal E, S, or G metrics. And we can actually engage with those companies, and sometimes it's more important than we do to help them get them to where they need to be, as opposed to keep them on the sidelines and not having anything to do with them at all. So opportunities are abound as long as those companies are interested in making a significant change, and measuring that change over time is what's key.
Yep. So I guess that's why governments worldwide are looking at different measures and making changes as to how companies can represent themselves within the funds that they manage.
Yeah, 100%. Part of the policy response is a result of this misleading practices and this greenwashing that we've talked about. We want to make sure that everything is transparent. And we want people to understand exactly what they're investing in and which funds are just genuinely focused on sustainability and which ones are not. A perfect example of that are some of the fines that were imposed in the US with Goldman Sachs and Deutsche Bank for making misstatements on their ESG investment process. So fortunately for NEI, we've been at this for over 30 years, and we abide by all the rules, and all the claims that we make are 100% vetted and accurate. But unfortunately, when you see flows, when you see dollars go into this particular space, it really, really opens the eyes of a lot of other asset managers that like to get into this space. And sometimes they get in a little too quickly and not necessarily with everything tightened up as much as they should.
Well, it's funny that you say tightened up. Can you tell me a little bit about the rules and how they really work in detail?
Sure. So in Canada, it's simple because we have what's called the CSA, or the Canadian Securities Administrators. They regulate the Canadian capital markets, and they have a mandate to do one thing, and that's protect the investor, protect your clients from fraudulent, from manipulative or misleading practices. So as investors became more and more interested in what is this ESG thing and what is this RI thing, you can appreciate that the industry responded, and they all of a sudden, all these ESG names got put into the system and attracted new assets, and all of a sudden this space grew significantly, and this really prompted a lot of asset managers to follow the flow of funds and offer all these different funds that now the CSA has a tight control over, to make sure that the claims that they make, including ours, are in fact accurate and fair.
However, what we have been seeing in the U.S. is this backlash against ESG or SRI, and that it seems a little bit counterintuitive. But in your idea, what do you think is the actual cause of this backlash?
Yeah, I think, there's no question. It's in the paper all the time. It's in the news all the time. And it almost varies state by state. I mean, you could travel across the U.S. from one side to the other, and some are pro-responsible investing and some not so much. But if I go back, I think the confusion originally came from what we call exclusionary screens. That means clients don't want to invest in a particular sector. And for the most part, that included staying away from certain industries, like those around fossil fuels. So you can appreciate the big oil and gas companies. They weren't too happy that some investors considered them to be ineligible for investment. And this then just became exaggerated by politics in the U.S., when all of a sudden now those big oil and gas companies were no longer, deemed to be investable from an ESG perspective. That had a huge implication, especially across the U.S.
Let us not get into American politics here.
No, especially these days, it's never a dull moment. Especially it goes every day. There's twists and turns, as I'm sure you and your listeners know.
Indeed. But then again, there was an article in Bloomberg some time ago that talked about outflows from ESG funds. And In your experience, how does a drawdown like that potentially affect things?
Yeah, it's a good question. But despite the the politicization that goes along with ESG and all the things that we're seeing, overall demand in Canada for ESG or RI strategies, they've actually remained resilient with net positive flows year to date, as recently as at the end of June. So, in fact, in Canada in 2023, net sales in responsible investment mutual funds were marginally positive. In contrast, mutual funds as a whole experienced net outflows. So the point to those numbers is there's still very much a lot of interest in this space as it continues to grow in popularity.
Is there cause for concern?
I would say that there's a lot of noise associated with ESG and all the, the political ramifications that go along with it. But at the end of the day, there's what everybody needs to keep in mind is there's a lot of key differences between Canada and the U.S. Certainly from a political scrutiny perspective, it's not as much of an issue here. We have more standard fund definitions, and that helps us avoid some of the confusion that the U.S. might be experiencing. So essentially, we're not as concerned about the political changes because, as we've made it clear throughout this discussion, ESG risk management is just good risk management. And quite honestly, here's what's really important. It doesn't matter who's in the White House. It doesn't matter who's leading our country. At the end of the day, ESG is about data. And what we do and how we interpret that data is really what's important at the core. And it doesn't really matter what the political environment is, because this is a long-term investment, a long-term play that looks at the data. And like I said before, that either minimizes risk or avoids risks or look for opportunities. And that really doesn't have much to do with politics at the end of the day.
Absolutely not. So all of this talk about ESG and all the fun that there is in doing what you do, can you tell me a little bit about some success stories?
Yeah, for sure. There's a number of them. I'll start with one that's near and dear to me. And if you and all your clients are anything like me, there's usually an Amazon package outside my door on a given day, right? Sometimes more than one.
My wife knows his name.
Yes. A lot of these delivery men and women are on a first name basis, right? So we've actually engaged with Amazon, and you may recall in the past when you'd open up your Amazon package, you would see those plastic air pillows that protected whatever was inside. Yes. Well, we've worked with Amazon, and we're happy to say as a result of our engagement, that packaging is going away by the end of the year. So for each of the last 4 years, thank you, there's been a shareholder resolution asking Amazon also to report on its effort to reduce plastic waste. And NEI voted in favor because we are significant shareholders each year, and we were part of the co-filers for the 2022 annual general meeting resolution. So what this means is at the end of the day, those plastic air pillows are gone, and now you're going to see recycling cardboard and recycling paper that's now going to be used to protect those products going forward. So that's one engagement that most of your clients, I'm sure, can relate to. The next time they open up a package, they can think about that evolution. The other one, I'll just add one more. We've been engaging with Loblaws back since 2006, and I bring them up because they've been in the news quite a bit over the last little while, as I'm sure you know. We've spoken to them since 2006 every single year except one. There are at least 9 milestones that we link to our conversations, including them encouraging them to use their first sustainability report through implementing significant changes in the supply chain practices, announcing net zero commitments. So the point is, Loblaw is another company that we go back to to mid 2000s, and we've been engaged with them, really hitting some significant milestones and improving some of the situations that they've been dealing with over the last number of decades. So those are just 2 examples I'll share with you.
And of course, not already discussed, but that's another way of trying to affect change is becoming a large shareholder and doing proxy votes and getting that voting in there. Am I correct?
Yeah, it gives us we're fortunate because we can flex a little bit of a voting muscle, if you will. So if we are significant shareholders in that company, it gives us the right to be able to have our votes count. And in the cases that I've just explained to you, where we're successful along with others is that we can really direct change. And you can do that when you're a significant asset holder. And that gives us the opportunity to kind of get that company where it needs to be. And as Amazon, as I've mentioned, is just one perfect example of how you're actually seeing that vote and that momentum impact the way they operate their business. So, think of that the next time you open up your package.
Well, that makes me think that there's a lot of stuff that goes on behind the scenes that we really don't know about. But having spoken to you today, it gives us a bit of an idea. So what, in your opinion or in your view, are some of the long-term opportunities of being invested in ESG funds?
Yeah, for sure. So I really would boil it down to two things. Really, it's about broadening our inputs. We talked about data, and at the end of the day, I personally believe responsible investing is all about data, right? Using data or inputs and baking them into the investment decisions that we make. Whether that's identifying risk factors that could be relevant to the long-term value of a company, or thinking about the types of opportunities that we can invest in. We talked about risk mitigation. We've talked about opportunities, the wildfires. Everything that we see from an RI or ESG perspective really gives us an opportunity to look at the world a little bit differently. And secondly, what's important is if we don't protect these assets on which our future returns depend on, then we can't continue to generate returns indefinitely into the future. So responsible investing is really, its aim is to generate returns for investors today without impacting the ability of investors of the future to be able to do the same. So I think it's those two important factors that really represent the long-term opportunity of ESG or responsible investing going forward.
Tim, thank you so much for spending some time with me today. It's greatly appreciated. Again, everyone, Tim Fox from NEI Investments. I'm John Leroux. We'll talk again in the near future.